India's largest lender, SBI, has seen its profits tank 66% in the fourth quarter. That's the sharpest fall in the bank's profit. And provisionings for bad loans have seen a twofold increase, which dented the fourth quarter earnings. We have with us Management Chairman Arundhati Bhattacharya speaking to ET Now exclusively. Ms. Bhattacharya, thank you so much for taking out the time. My first question to you is, can you help us understand what led to the healthy margins this time around, despite the high NPA stress? In fact, the gross NPAs this year have been the highest in 6 years at least. Help us understand that.
Basically, I think, our business itself, if you look at it, there's been quite an amount of healthy growth. On the average, advances have gone up by close to 13%. And the cost of our deposits also have started coming down. Basically, these are the two things that ultimately contribute to NIMs. So regardless of the fact that we have had quite a large amount of slippages, I think these are the things that have sort of held the NIM up.
How much of slippages are due to RBI asset quality review, and how much of are provisions due to the RBI asset quality review, and how much more stress needs to be recognized as per the RBI AQR?
See, out of about 30,000 crores of slippages, 1,000 crores has come from our national banking group. Then from the rest, 29,000, 9,000 is from the RBI AQR. And the remaining 20,000 is on account of other accounts, which may have had an AQR impact with other banks. And obviously, they were weak with us, but they may not directly have been on our own AQR. But these were weak accounts, stressed accounts, and therefore they have been recognized. Going forward, we have created a list of around 31,000 crores worth of accounts. We have gone through account by account in respect of all our large and mid-corporate accounts. And we believe that the stress would be in this range, and therefore these accounts would be specially monitored.
Is the stress over on books? You mentioned that the watch list is about 31,000 accounts, but how much more of slipping do you see from these accounts going forward?
As I told you, this watch list of accounts is around 31,000 crores. We would like to be very conservative and say maybe around 70% of this could slip. And yes, if you are asking us whether we are having an internal watch list, obviously we are having it.
SBI has a high exposure of 17% in the infrastructure sector and 7% in the iron and steel sector. What's on the cards in terms of easing the pain in these sectors, and what is the kind of progress that we can expect?
I think a lot of progress is already being made, at least where infra is concerned. The road sector, we have seen a lot of progress. Even in the power sector, for that matter, there has been quite a bit of progress. So yes, there is progress in all of these areas. Iron and steel continues to be stressed as a sector, but subsequent to the MIP, we are seeing much better numbers coming out of the iron and steel projects. Not only that, as the demand goes up, especially in the area of things like roads, in the areas of housing, in other areas like railways, track laying, all of this will actually also impact the demand that will be there for iron and steel. We also believe that the government is looking at various ways to ensure that the inputs that are given to the iron and steel industry, that those come at reasonable prices so that the industry in India itself is very competitive. So given all of this, we believe that, yes, while there is current stress, but there would be better days ahead.
Ms. Bhattacharya, what is your outlook on both credit growth as well as deposit growth for FY17?
I think, even this time we have actually grown in market share, both in deposits and advances. So we believe that we will do the same in this coming year. In respect of advances, I believe our growth will be in the range of 13-14% as of now.
SBI plans to undertake the gigantic and complex exercise of merging its multiple subsidiaries with the parent. What is the kind of timeline you have in mind to complete the entire process, and what are the kind of challenges do you expect in this process?
I think the timelines are between 6 months to 1 year, and obviously there would be challenges. Any merger has challenges. One of the biggest challenges would be to ensure that the people who come in from those banks, that they feel comfortable in the new entity. So those are the sort of things that we need to look at. We also need to work on the redundancies and the overlaps and to take those out, because it is only the efficiencies of operations that will give us the upside. So obviously challenges are there, but we feel that we are quite equipped to take on these challenges.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.